Target is the new mall. Obviously, we've seen huge share coming out of the mall, coming out of department stores. And Target is starting to really own the mass premium space. They've got 10 brands, private label brands that are over $1 billion. They're fulfilling 95% of their orders from stores, which means lower costs on digital because the consumer is also picking that up, coming to the store 40% of the time that they're ordering online. So it's a margin story. It's a market share story. It's the new mall. And certainly you're seeing comps that they already reported for holiday up 17%, with store comps up 4%, which is incredible. So I think they're really the one-stop shopping future mass premium player that's going to just own this channel.
And I guess the question, Jerome, is, I mean, you look at the last quarter, such a strong report from Target. It gained market share across all 5 divisions: electronics, home goods, apparel. Sales of electronics for Target in the last quarter rose 50%. Those are really tough comps to beat.
Absolutely. In fact, it's all because during the pandemic, they executed so well and were able to gain so much of the market share away from the department stores. We agree with what Stacey said, that Target has now become the one-stop shop. The department stores used to be the one-stop shop, but then with the pandemic, Target stole all that market share. And now its clientele is really accustomed to come and enjoy the same-day fulfillment, the same-day services as Ship, Drive Up, and even Pickup have all raised over 500, have all increased over almost 200%.
Yeah, Stacey, I mean, being a one-stop shop, how critical is it that these big box retailers and department stores, that they stay nimble and flexible with the type of inventory that they hold as consumer preferences change with this economy reopening?
It's so crucial. And if you think about Kohl's, almost 60% of their business right now is coming from home, kids, and athletic. Now, if we think about when we come out of the other side of the vaccinations, everybody's going to want to bust out and go out. And then you're going to see this shift to apparel. That's really one of the spaces that Kohl's has been underperforming. So it's so important to be able to have short lead times and literally be able to pivot to where the consumer is going, whether that's categories or whether that's how they want to shop. And also, you know, you look at Target, they teamed up the other day talking about they're going to have an enhanced platform with Apple inside their stores. They've added Levi's into their stores. So you're seeing the brands go where the traffic is going, and that's Target.
I wonder, Jerome, on that point, I mean, what retail earnings could look like today and the rest of this week when you have, you know, more stimulus checks potentially coming down the way, plus a retail sales print of over 5% for the month of January?
Well, it's interesting because our StarMine data tells us that both Kohl's and Target could post positive surprises today. It's no doubt that department stores have been struggling even before the pandemic, but Kohl's is well positioned going into the future. A lot of the analysts polled by Refinitiv have become significantly more bullish on the company, especially with its initiatives with Sephora. The analysts do believe that going forward, it's positioning itself for future growth. And then when we look at the overall retail sector in general, e-commerce is here to stay. Many retailers are being very vocal, like Walmart and Macy's, telling us that they believe that consumers' behavior towards omnichannel and e-commerce is permanent. And even consumers agree. In a survey with Myra Blue Public Opinion, Refinitiv discovered that Americans are telling us that even after COVID, they intend to continue to shop online, that they are continuing to practice social distancing, working from home, order online, and even avoid large crowds. So as a result, we're expecting e-commerce to continue to grow into the first quarter to 43% for the beginning of 2021.
Wow. I mean, on that note, Walmart, Stacey, has been a big beneficiary of this trend that, of course, has been accelerated by the pandemic. And yesterday, Walmart saying it's nabbed 2 Goldman Sachs bankers to help lead its new fintech. We know it's sort of been making these bigger moves in technology, but will it pay off with the stock down 7% year to date?
Well, I think Walmart has obviously been the biggest beneficiary for obviously being able to stay open and offer that incredible grocery proposition, which is half of their mix. And yes, they're investing in the future of technology. And I would argue that Target and Walmart are moving more into trying to be technology companies. So it will pay off in the end, for sure. I would also say that, you know, some of the other trends we're seeing in retail is the buy now, pay later concept. So even the likes of Macy's is starting to embrace how that younger consumer wants to shop. And as a result, they're seeing that younger consumer that's spending more, that's loyal. So, there's all sorts of different angles in retail for the old school retailers to try. And it's great that so many of the old school brands are perhaps saying, okay, our old school credit cards, perhaps we move forward and embrace this younger type of payment that drives a new consumer.
So bottom line, you think Macy's move with Klarna was the right move?
I think it's an incredibly smart move. Absolutely.
Shepard Smith here. Thanks for watching CNBC on YouTube.